Hello, everybody. I'm your host, Derek Bird, here at StopStrugglingNow.com. And today, you see cars in the background. But we're not going to be talking about cars. This is going to be about real estate. Because what I wanted to illustrate is, I just so happened upon this car club who has cars. And the real estate, when we're talking about private money lenders, when we're talking about getting funding, sometimes you have to go to clubs if the bank can't give you loans. And this is how you learn the lingo. Loan to value, NOI, net operating income, things like that. We're gonna talk about it, so please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And I forgot something. Thank you for watching. And now I always have to say, don't forget your merch. StopStrugglingNow.com website and get your merch. We have men's and women's t-shirts. The next slogan, the next saying that's coming out is gonna be on Friday or Monday. So you'll see the new one. And right now we got the specials going. Free shipping, no tax. 10% off if you use promo code MOTIVATED. So anyhow, let's get started. You saw earlier I with the car club. The guys were showing off their fancy rides. And again, if I want to improve an old car, a new car, that would have been a good spot for me to talk to a few people there. They're upgrading and improving old cars. So, what I'm talking about today is, how are you going to find that real estate investor? Look behind me. I'm sitting here with retail environment behind me, as you can see. And if this place was for sale and you wanted to buy it, you're sitting there saying, hey, Eric, I don't have the funds for this, nor would I know what to do. So we're going to start from scratch. Some of you may know what to do with real estate, so some of you may not. But I'm going to start off with the basics, because the basic is this. Whenever you want to do something that makes a lot of money, the powers that be try to change up the lingo on you. That's why when you go to high school, they say you want a better job, go to college. Then you go to college, you graduate, then you want to go get another job, they say we want experience. Then they start using different lingo, different words, different sayings. So I'll give you a perfect example. All the gurus. This is the no guru zone. All the gurus are talking this nonsense about no money down. Talking semantics. Okay, you can do no money down when it isn't your own money. You can do no money down when you're saying borrow from your relatives, borrow from your friends. Let's get real. Anytime you want to buy some real estate, you're gonna probably have to put some money down. There's always an exception to every rule, but we're gonna start with the language. So let's just say, for the instance, I wanted to buy this complex here, and if it was for sale, but it's not. So now you're going to hear things like, instead of send me over some sort of offer, they might say that, but a lot of people say send me over an LOI. And a lot of people are like lost, right? You're feeling intimidated. You're like, oh my God, what is this? Letter of intent. Basically, you're just outlining what you want to buy it for, what your terms are. Like, let's say you could say it's $2 million, and I'm going to put down 10%. Okay? And then, of course, who's going to fund it? You might have to go to a bank. You might have to tell them who's going to fund it. You might have to send a offer sheet of some sort showing that you're already funded. Things of this nature. But that's what they call an LOI. So people get kind of lost. They're like, oh my God, what is that? Now I got to learn some new lingo. No, they don't know nothing more than you. They're just trying to change the lingo so that you feel intimidated and might not want to enter. An obstacle. You're getting it? An obstacle. Like I said, high school, they say you want a better job, go to college. Not everybody's going to go to college. So therefore, that's another obstacle. What other kind of things they talk about? So now you say, okay, before we get to the LOI, we have to find out how much this thing makes, right? So they're going to say, you want to find out the NOI, net operating income. Again, these aren't everyday terms, but we just want to know the profit. After the revenue minus expenses equals profit. That's net operating income. But they're changing it to NOI. So again, you're feeling a little intimidated, not knowing these terms. When you talk to people, they say, yeah, send me over an LOI if you want to buy it. Oh yeah, and here's the NOI. And you're sitting there going, what are he saying? But that's all they're doing. It's just a different lingo, but it's just simple stuff. It's nothing out the ordinary. It's just accounting. And you're gonna have to get the accounting. So what are you gonna do? Whenever somebody says they have property for sale, it could be this right here in the background. Don't take their word for it that after all expenses are paid, that they're making like $400,000 a year. Okay? Profit. You're sitting there going, man, that's a great deal. I'm buying it for $2 million. I'm going to be getting like $40,000 a month in profit after all expenses are paid. Next words out of my mouth, hey, send me over your tax returns. I want to see that you actually are paying taxes on $400,000 profit. And make sure your CPA is signed off on this with his signature. Because I want to make sure that if this thing goes wiggy, I want to be able to sue somebody. You follow what I'm saying? Because all kind of people play these kind of games. So be careful when you're out there looking for real estate. Now, let's start with this. This is all, we could do multifamily the same way. This is commercial. Either way, we're talking about the same kind of lingo and language. And this is why people get intimidated on trying to get into this market space, get into real estate. It's nothing. They're just trying to give you obstacles so you feel like you can't buy anything. That's all it is. Now come on, hang, stop struggling that way. So what we're trying to do here is, whether it's multifamily or commercial, all you have to do is look for the property. And then you want to make sure that it makes profit, of course. You can't guess, no reason to guess, no reason to risk any time, energy, and effort and money. Here's another thing that they'll say cap rate, 6%. Okay, let's just get this understanding. That's basically if the property is, let's say, $2 million, 6% is only $120,000. That's all the profit would be. So some people can live with this, some people can't. I don't want 6%. Inflation is damn near 6%. That means I'm not even going to be making hardly any money in reality after we have funding for $2 million or 1.5 or 1.6. The other thing, when somebody says LTV, loan to value, that's all it is. So now let's say I get an appraisal. I say this property here is $2 million because the rent receipts, the leases that we have, generates a revenue of, let's call it $250,000, $300,000. It could. Then I could say, hey, the NOI, $200,000, $300,000. So then I say, well, I want to sell this for $2 million. Okay? This is after our expenses. We're netting 200 grand. So I say I want $2 million. All right? So what's going to happen is, the guys who's going to give you a loan needs to know the LTV. They need to know the loan to value, the appraised value. Because most people are only going to give you 60, 65%, 70% loan to value because they have to be protected if they're going to fund you. So if you default, they want to be able to be in a profitable position where they could say, okay, he gave us 25, 30% down, and if he defaults, we know we can sell it for 70% and get our money back. You follow what I'm saying here? So it's just that simple. LTV, loan to value, appraisal. That's all it is. So somebody else might come in here and go, hey, you know what? If you raise the rent up $1,000 a month overall, $12,000 more per year, it might be worth 2.1. So now you can get an appraisal at 2.1. The guy's selling at 2 million. You can get your 1.750 funded for this, but you're going to have to come up with that 25%. This is what the gurus don't tell you, who you're going to go look for. Okay, let's go somewhere else. Yankee Stacking, I'm talking to you. We're supposed to be doing a live joint venture on this one. Private money lending. That's right. He does precious metals all the time. He has another channel on here. But we were going to do a live joint venture because we're going to talk about private money lending. Private money lending is when there is an individual, not a bank, not a mortgage broker, not a commercial lending broker, none of that. It's a private money lender who says, hey, you know what? Eric, you bring me this deal where it shows it's making $400,000 a year after expenses. And you know what? I'll fund this thing for you at 80%. You just got to do the other 20% or get that 20% from somewhere, the 25%, whatever. The private money lender can make up his own rules. But that's just it. He's private. He might charge a little bit more interest though. Might be interest only for X amount of months. But you can make up your own deal with a PML deal, a private money lender, because you're dealing with a person who's using their own capital, who's using their own resources. It's not a bank where they have underwriters. It's not a mortgage where they have underwriters. So he can make up his own decision and say, you know what, it's worth it to me. Because if you default after you give me 25% down, hell, I'll be making $400,000 a year. You follow what I'm saying? So those are the kind of terms that you have to understand. And where else are you going to find these lenders? Think about this, like I was at the car club, right? Think about real estate club, real estate investors club. There's one in every city. Think about it. You go down there, you talk to people, just like you see me at the car places. You go down to the real estate places and you go and talk to people. You find out who's there. There's people there saying, hey, anybody in this room have a deal that we can look at? There's other people sitting here saying, hey, we have funding for anybody that has a deal. You just never know who you're talking to, and you never know who's in the room. It could be a banker. It could be somebody that does mortgage loans, somebody that does commercial loans. You just never know what's going on, and these are the kind of places that you would have to be as an individual. You got to step out. If you want to make a lot of money, you got to step out. You just can't sit in your room, call on the phone, or go through the social media aspect of this. If you want to make hundreds of thousands of dollars a year, you're going to have to go out and meet people, go out and talk to people. Unless, of course, you want to write a book, unless you want to do some filming, whatever. There's always ways to make money. But if you want to be in the real estate game, you can't sit at home. You have to go out and look for properties, or you can go on the internet. There's a place that everybody should be familiar with, LoopNet, CoStar. These are what people consider leftover properties after they couldn't sell it on the open market, so to speak, using a broker. Then that broker will put it on LoopNet, and everybody feels there aren't deals. Every now and then there's deals on there. You just have to keep looking. What's happening in this day and age is a whole bunch of people want to be in real estate. So what are they doing? Scouring everywhere. They're meeting at these real estate clubs. They're meeting at the board of realtors. They're meeting and going online and meetup groups. They're on Facebook. There's all kind of groups where you can find Bigger Pockets, for instance. There's people there that help you find properties. You can go to like the Midwest, Ohio, Indiana, find multi-family properties that somebody's selling for like 80 grand and has 6 units in it, which seems to be a good deal. But you have to worry about repairs, you have to worry about expenses and upkeep and things like that, taxes, all kind of different things come into play because these are generally older properties. They haven't been built in the last 10 years. They're usually like 30, 40 years old. So there's gonna probably be some wear and tear and some rehab that you're gonna have to do. Keep in mind, all this comes into play. Not gonna be an easy game to get into, and you don't want to get in because you see a deal where you see, like I'm giving you an example here, the $2 million. And then all of a sudden you see 400 grand and you're hot to trot. You're sitting there going, oh man, I got to buy this. I got to get this deal. And after you look at it further and you find out, you know, he filed, yeah, we made 150 grand. You follow what I'm saying? So you got to do your due diligence. Then you find out the lease or the rent rolls are not legitimate. So that's right, you heard me. If you're going for apartment complex, let's say there's 50 apartments, they'll send you over rent rolls. All of a sudden you'll see like, okay, yeah, we make $200,000 a year. The rent rolls. You start adding stuff up, you're like, okay, this is kind of cool. But again, I need to see something else. because rent rolls can be falsified. And that's why they're trying to get you again. Just keep in mind, think of it this way. We live in a third world country. Just look at it that way. Just think that everybody's trying to be out to get you, so you want proof of everything. And you want to double check that proof, and you want confirmation of the proof. So just keep in mind, I'm not saying everybody's like a little scam artist, but these are the kind of things that happens when there's hundreds of thousands or millions of dollars on the line. Because once you get this thing funded, it's not like you can back out. Okay? So this is what we're talking about, how to get an investor. So you go to the real estate clubs. Other places that you don't think about. A lot of you have 401ks. And you don't understand the power of a 401k after you've worked somewhere for 20 or 30 years. Because what's going to happen is you could potentially have hundreds of thousands of dollars in there. When you set up an LLC, you can get funding for and against your 401k. That's possible. So you can use your own money. Insurance, if you had one of those universal type insurances, again, you can borrow against that for down payments. Let's say you have a free and clear property and you have a 1031 exchange, where that means you have to pay the tax for it later, but you can put your property in there and get money and buy some other property. There's all kind of different ways that you can do it, but 1031 exchange, for instance, nobody's going to talk to you about that. Again, if you're not in the real estate, you're going to sit there and go, oh my God, what is this now? This is why whenever you go to any business, you have to educate yourself. You have to invest in yourself. Nobody opens up a can and knows everything. Okay? Other people just have advantages because if their family is in real estate, then they know things that other families may not know. That's the only difference. They got a head start. But you can catch up easily with today's society, with the internet, social media. There's books still. Come on. And then, of course, there's Stop Struggling Now. Tell you like it is. So where else can we get investors? Some of you don't think about it, but there's investors. You know those hedge funds? Wall Street? Investment funds? ETFs? That's right. These guys invest into apartments, into hotels, into commercial properties. This is how they get their profits. I figured I might as well show you a little hedge fund that I just Googled it so you know how simple it is. Not saying that it's easy to get a hedge fund to come and support you and invest with you. I'm not saying anything like that. So those are the kind of things you got to think about. But this is another opportunity down the line. And I mentioned LoopNet earlier. So just give you an idea of what that looks like. You can put in any city that you want and look it up. Property type you see for sale here: office, industrial, retail, restaurant, shopping center, multifamily, specialty. And they'll give you a little, and you can look all over the country, all over the world. And then you have CoStar, which is similar, and you can see for sale. They even have sale comps, but I think you have to join part of their, you have to pay them the lease. At least you used to have to pay them. And LoopNet, there's a free situation with LoopNet. So that's why I used to use and still use LoopNet. Let's see. And again, the real estate investment clubs and going around and getting into real estate investment clubs and talking to commercial brokers that deal with property. As long as you have one, they can call you up when something new comes on, on the market. And you can be a little bit ahead of the curve. You get a rapport, so you don't really have to run around looking for things. You'll know in your city or whatever area you're in that they're trying to, move the property. So they'll send you an email with the listings, and that's it. You don't have to do much. Right now, I still get 5-6 emails from all over the country for when multifamily properties and commercial retail properties pop up. And it's that simple. So once you get into this, you'll figure out a way to get shortcuts so you don't have to spend all your time, energy, and effort looking for properties. All right? Real estate investment clubs. I'm in Florida right now, so I just Googled. And as you can see, the west coast of Florida, east coast of Florida, there's a couple. There's more than that. This is just a Google I did near me. and this is what came up. There's a lot more than that, I'm sure, and that's where you can walk in the room, talk to people. You can get education for free generally, because then you'll understand the language they're using, you'll understand what they're talking about, and then you'll feel a lot more comfortable when you're actually looking for properties. And you never know who you might meet there. There's investors there, there's people selling properties there. A lot of you may heard of flipping or wholesaling, where you get a property under contract, and whether it's multifamily or not, you get it under contract, and then I'll use this $2 million example. Let's say, for instance, you got it under contract for 1.7, and then you tell him, give me 1.8. I mean, that's simple. And you can't do this in all states, because in some states you actually have to buy the property, and you can't do double closing. In 90% of the states you can't do double closings anymore, where you used to be able to say you're going to buy the property for 1.5 and then find a buyer for 2 million and put both in escrow, and then the $2 million buyer, when he puts his in escrow, your 1.5 is paid, and then they cut you a check for 400 and some odd $1,000 after the real estate fees, the broker fees, and all that. So just keep all this in mind. And last but not least, the Bigger Pockets that I mentioned earlier. This is their website, and they have forums, they have education, they have network, they have tools, they have podcasts. This is a great site because they do commercial property, real estate investment, single family homes. They do everything, and they talk about it, and they have a forum where lots of people talk about it. And again, they have people that invest, tell you how to invest, where to get the money. Very informative. If you're going to be in this field, you have to expand your horizons. So with all of that said, I've ran past what I wanted to do with the video, but thank you for coming. Thank you for watching. Please like, subscribe, and click the bell below so you get the latest updates. And it's hard out here, so that's why we need to get extra streams of income. That's why I'm always talking about it. So keep your head up, keep moving, and I'm out.